To Donald Trump's trade war now, and China has called on the United States to cancel all tariffs after Washington announced exemptions for some consumer electronics. In a statement, Beijing's Commerce Ministry called the exemptions a small step, but urged the U.S. to return to a path of mutual respect and to correct what it called Washington's mistakes.
In early 2025, President Donald Trump implemented significant tariffs on Chinese imports, escalating the trade conflict between the U.S. and China. These tariffs, which go as high as 145% on various Chinese goods, were designed to reduce the U.S. trade deficit with China, boost American manufacturing, and curb intellectual property theft.
New tariffs begin. Those new tariffs are in place today, as President Trump's increased tariffs on China started yesterday. Those taxes now total 145%. However, late Friday, the Trump administration said it would exclude electronics like smartphones and laptops from reciprocal tariffs, a move that could keep the prices down for popular consumer electronics that are not usually made in the U.S. So this is going to benefit big tech companies like Apple and Samsung, and also chip makers like NVIDIA, setting the stage for what could be a tech stock rally tomorrow when the markets open. U.S. Customs and Border Protection said items like smartphones, laptops, hard drives, flat panel monitors, and some chips would qualify for the exemptions. Now, meanwhile, China has announced Friday that it will raise tariffs on the U.S. goods from 84% to 125%. And a lot of folks are wondering, what does this mean for me? For more on this, I do want to bring in Sandra Swirsky, who is the founder and CEO of Integer.
However, the tariffs have had far-reaching consequences, not just for the U.S. and China, but for the global economy as well. The tariffs cover a wide range of products, from electronics and machinery to textiles and agriculture. This has increased costs for U.S. businesses and consumers, as many American companies rely on affordable Chinese imports for production. As a result, U.S. businesses are facing higher input costs, which are often passed on to consumers in the form of higher prices. Small businesses, already operating on tight margins, are especially vulnerable, and many are struggling to absorb these cost increases without resorting to layoffs or price hikes.
China is calling on US President Donald Trump to completely cancel the reciprocal tariffs against the country, despite announcing a 90-day pause on global tariffs. Levies on Chinese imports have been increased to 145%. The Trump administration announced electronics, including smartphones and computers, will be exempt, but has since confirmed that they'll come under a separate tariff to be announced at some point over the next 3 months.
We all expect that the President of the United States and President Xi of China will work this out. I am completely confident, as is he, that this will be worked out in a positive, thoughtful, and effective way.
And markets are hopeful that Trump's walkback of restrictions on smartphones and computer products will not be the last time that he makes an exemption. US stocks are expected to recover. Shares in Apple and NVIDIA to soar after that announcement. We'll expect that in the ASX today in a couple of hours' time.
For larger corporations, the story isn't much better. Companies in sectors like technology, retail, and manufacturing are also feeling the impact as the cost of imported goods rises. Goldman Sachs recently warned that these tariffs present material risks to the U.S. economy, potentially slowing economic growth and driving inflation higher.
On Saturday, Chinese import tariffs of 125% on American goods took effect in retaliation for Trump's 145% levy on Chinese imports to the United States. So let's speak now to Veena Najibullah, the Vice President for Research and Strategy at the Asia Pacific Foundation of Canada. How much of a climb down do you see this as?
Yes, good morning. This is definitely a concession, but it's a concession largely made to U.S. Tech companies who have been pressuring President Trump for exemptions. So the big winners here are, of course, Apple, NVIDIA, Dell, and other companies. This is a slight de-escalation in the trade war on China, because about 24% of what U.S. imports from China fall under these categories of electronic goods. And it's also a big win, and it's certainly a cause for relief for most of Southeast Asian economies like Vietnam, Malaysia, Cambodia, that export a lot of electronic goods to the U.S.
China, unsurprisingly, has retaliated with its own tariffs on U.S. goods, targeting sectors like agriculture, aerospace, and automobiles. These retaliatory tariffs have made U.S. exports to China more expensive, reducing demand for American products. The decline in orders from China has affected U.S. farmers in particular, who rely on the Chinese market for crops like soybeans and wheat.
Do you think that he is expecting China to try to do the same?
Absolutely. So President Trump keeps saying that he believes that there will be negotiations, that China wants to negotiate, and is simply trying to find the best way to do that. But I think an important point here is that China of 2025 is not China of 2018. China and President Xi now has a lot more options, and we've seen that not just in being able to meet the tariffs that U.S. is imposing, sort of tit for tat, dollar for dollar, but also to use other tools, export controls, various investigations into U.S. companies, banning of Hollywood movies and so forth. So I think we will see a lot more forceful pushback from China. But of course, at the end of the day, China needs the U.S. market. About $500 billion of exports from China. It's not going to be easy for them to find alternatives. So they will make deals. But the difficulty here is how long would those deals last? Because even on these electronic good exemptions, we are now hearing this morning that maybe they're only going to be in place for 1 or 2 months. So a lot of unpredictability and volatility here.
And what does that unpredictability actually mean for the Chinese market and for its consumers?
Well, it essentially, of course, there will be short-term economic pain. There will be an impact on economic growth in China, but ultimately China will try to continue to find alternative markets, make deals with others. We're already seeing this, a charm offensive with Southeast Asia, with President Xi traveling to Southeast Asia this week, also with Europe in terms of the visiting delegations from Spain and conversations with EU. So it's going to be really difficult for some of these other economies because they would want to continue to have stable and good relations with China. But on the other hand, they want to protect their markets because they don't want to see Chinese products that are not able to come to the US being dumped on their markets and impacting their manufacturing.
The Chinese economy, which has been experiencing a slowdown, is also feeling the strain. While China is investing in other markets and expanding its domestic manufacturing, experts predict that U.S. tariffs could cut China's GDP growth by up to 1 percentage point over the next few years. The Chinese government is also facing increasing debt levels, which only complicates efforts to mitigate the economic impact of these tariffs. The effects of this trade war extend well beyond the US and China. Countries that are part of global supply chains, particularly those in Europe and Asia, are facing delays and higher production costs. The World Bank has warned that the escalating tariffs could reduce global economic growth by up to 0.2%.
The global financial markets have been roiled by US President Donald Trump's tariffs and the multiple revisions, delays, as well as exemptions and muddied explanations that have come along with them from the president and his top economic advisors. Now, there's been extreme volatility as investors wonder if the most impactful tariffs will really happen. The White House insists that they will. In the meantime, uncertainty reigns. Today on Wall Street in early trading, we're sitting well into positive territory. Dow, NASDAQ and S&P well above that 0.5% mark in the green. And this is quite important because we've seen real pressure coming through. But the last few days, we've seen some reprieve. And again, it has to do with the messaging from the White House. Meantime, European stock markets are edging higher today after President Trump said he's considering those exemptions on auto tariffs. Here's a look at the major indices late in the trading day.
In a global economy that's increasingly interconnected, these disruptions are beginning to ripple out, threatening economic stability worldwide. Politically, these tariffs have also strained relationships between the US and its allies. Countries like the European Union, Japan, and Canada, which are already facing their own economic challenges, have voiced concerns about the destabilizing impact of Trump's protectionist policies. Some argue that these tariffs are a step backward, threatening the multilateral trading system that has helped drive global economic growth since World War II. Critics of the tariffs, including former White House Communications Director Anthony Scaramucci, warn that the U.S. could face a recession if the trade war continues for much longer. The uncertainty created by the tariffs could erode consumer confidence, leading to reduced spending, lower growth, and job losses. If businesses and consumers pull back from spending, the economy could slow significantly, potentially dragging the global economy into a downturn. Looking ahead, the long-term effects of these tariffs are unclear. While the goal is to revitalize American industries, the economic fallout from these policies could be severe. Many analysts believe that the trade war could have lasting negative effects on both U.S. and Chinese growth. If tensions remain high, we could see a slowdown in global trade, with countries potentially turning to protectionist measures of their own. The U.S.-China trade war has already reshaped global economic relations. The tariffs represent a pivotal moment for both economies and the world. As countries seek to navigate these turbulent waters, the ultimate question remains: will the tariffs achieve their intended goals, or will they trigger a global economic downturn?